So, hi guys. I hope you all had a happy Easter. There's a bit to unpack since we've last sat down in front of the screens. Enjoyed the time off with no cell signal, not looking at it even at a mobile phone for 4 days. So we've got a bit to look at since then. So last week we had non-farm payrolls at the end of last week, which is pretty strong. Now, normally that is bullish for stocks, and I think if we have a look at the charts, that is what happened. But that's normally. It should be bullish for stocks and bearish for interest rates. All right. However, in this current environment with inflation still the bugbear that it is, adding more jobs is inflationary. So that is therefore bullish for interest rates. So interest rates should be heading up on the back of that number as they try to control inflation, because adding more jobs adds more consumer spending into the market, into the economy, and the GDP is about 60% of the US economy. So that's very inflationary. So interest rates should be up and stocks should be down. But then stocks, who knows what goes on in the thinking of Stockland, because it doesn't always do what it should. Looking ahead, we've had holidays. There was the BOJ came out last night, which was interesting, and we'll have a look at what the yen did on the back of that. But effectively, the BOJ have not adjusted their position and still remain very dovish, and so the yen got slammed lower, weakness, and on the back of also strong US economic data, i.e. payrolls, and the stock market took that as a bullish signal. Then you've got that safe haven flow as well coming out of the dollar, or out of the yen, so out of the JGB. So there's that going on as well. However, looking ahead, we've got this number ahead of us tomorrow night, US inflation numbers. It's not the big one. The big one is the PPE, which we had a little while ago. We had also got PPI, but we had PPE the week before, I believe. US final GDP numbers. Maybe it was the week before that. FOMC. When was it? Pretty sure it was in March. Yeah, this one. This is the big one that the US Fed follows, right? So that was previous, and ahead of us we've got another inflation number, which will give us some volatility, and also the PPIs on Thursday night. Tomorrow night we'll also have BOC. They're looking at Bank of Canada. They're looking at pausing interest rates at 4.5%. Will they? I don't know. They had a strong jobs number last night, last week. They had a pretty strong jobs number. As we can see here, jobs also down, so that's also inflationary. So will the Canadians pause interest rates? I think that's a 50-50 roll of the dice on that one. And then Aussie unemployment. So there's quite a busy week ahead of us. Looking at a couple of charts I want to go through with you guys is this one here, which is Jerome Powell's favorite chart, and we can see there that every time it dips below zero, this is the spread between the 1 month, the 3 month T-bills, and we can see that every time it goes below zero, you run into a recession. Yeah. Not long after it, and as we can see, there's that, and that recession normally happens as it starts to tick up, but certainly we're in territory that we haven't been in for 20 years or more, well below 1, so that's an interesting thing to look at, considering where interest rates are going and how the US's economy is tracking. Odds of a rate hike, it's still a couple of weeks away until we get the FOMC. I think it's in early May, and the fact that they're going to pause interest rates has obviously we're getting closer to a hike thanks to the payroll data and that inflationary effect on that. And then this last one shows you the net positions in interest rate futures. So they are very bearish bonds. And when you're bearish the bonds, you're actually bullish interest rates, right? Because it's bonds are an inverse number, so that's super bullish interest rates still. So looking for on the back of that, we're looking for higher interest rates, and therefore you should get also a higher US dollar, and you should also get a higher US dollar on the back of that safe haven flow coming out of the yen and coming into US bonds. So on the back of that, we can see that the US stock market has pretty much treading water, going nowhere really. When you look at it on the daily, it hasn't gone too far from that 4,000 level in the last week, but still surprisingly strong, considering the economic data would indicate we're going to have higher interest rates. And we can have a look at the interest rate market, and it's certainly turned around over the last 2 days since the jobs number, and we can see the jobs number there pushing interest rate yields higher. Still a long way to go from where it was in the 10 years. 2 years are above 4% now. I believe Tyler talked about it. 2 years. Yeah, 2 year yields here. We can see back over 4% in the 2 years. 10 years, obviously a lot longer time frame, has more time. It's not going to be up there. The current yield on the US market is 5%. So I would expect the 10-year bonds to be tracking higher, closer to 4%, before we get to the next meeting in early May. So with that flow heading in that direction, as we can see, US dollar also gaining on the jobs data, and then gaining even more when the BOJ made their position clear that they're remaining very dovish on the yen and not moving interest rates over there, even though there was chatter that they might. They remain obstinate about it. So VIX is showing no fear in the market. As I said, the stocks are not really going anywhere. Gold is coming off as that sort of safe haven flow dissipates. It's kind of a bit of a confusing situation, because you think that okay, the US economy is still overheated and inflation is high, that the stocks should be tanking, but we're seeing that safe haven flow both in VIX, in the fear indicator, and in the yen, and it just seems that the stock market is not taking into account the risk of that recession, which when you're looking at the interest rate curve, it's pretty clear that it's going to happen. Why stocks aren't sort of taking that into effect, or why they're not protecting by buying gold or Bitcoin. Well, Bitcoin is actually going through the roof if we have a look at that, going bananas. So yeah, bit of a mixed picture there when you step back and think about that. Dollar yen, as you can imagine, the yen just got smoked on the back of the BOJ. Aussie dollar still doesn't like that 67 handle. It's back underneath that now. Did get up to 68, or almost tagged it. 94 basically, and then failed off that. I don't see any reason to buy. I don't know, I've said it for a long time. I don't see any reason to be buying Aussie dollars at the moment. I don't see the China picture, China growth story. I don't see that happening, and therefore, the commodity market saving the Australian economy. Don't think that's going to happen. Not necessarily bearish the Aussie dollar. I just got no reason to buy it. And I would only trade the Aussie because I have a firm decision on the US, but I'm bullish US dollar at the moment. So Euro failed off that effectively $1.10 level again, and should be retracing. You'd expect to find some support around here, around the 106 level, around that level there. You'd find some support, so 107.60. I would expect some support there, maybe even this low here, 107.87. But certainly, the way I would be looking at this is, if it does get back up to around here, I'd be selling it, and that's around the 108.80. And so you're looking for it to cycle again lower, back towards that 107.60. That's the euro dollar cable. Did manage to make a new high, so that double top over here is broken, but it too, you'd expect the market to be cycling back towards this level here, and might find support on the pound around this high, that low, which puts it at 122.70. And similar to the euro, you could trade it off the 124 handle and back down to that 122.70. And yen, it's now kind of frothy. It's got a higher low and now got a higher high. So I'd be looking for that to track up. Might pull back towards these levels here before having that run. Alright guys, I'll see you tomorrow.